Hello and welcome to Market Pulse, the podcast that will break down the complexities of the Sri Lankan capital market, demystify financial matters, and empower you with the knowledge you need to make financial decisions. Whether you're sipping your morning coffee, driving to work, or simply looking for financial inspiration, we have got you covered. So sit back, relax, and let us dive into the exciting world of stock market investing. We have here with us today Ms. Sheena Gunaratna, Senior Manager, External Relations at the Securities and Exchange Commission of Sri Lanka, who has been in the industry for over 10 years. Welcome to Market Pulse. Pleasure to be here, Ravisha. Together, let's dissect markets' pulsating trends and make sense of the ever-changing financial landscape. So, without any further delay, let's dive in. Sheena, shall we enlighten our audience on the functions and significance of the External Relations Division within the SEC?
Yes, Ravisha. So financial education has an important role to play in conjunction with investor protection, and to that end, the SEC conducts various initiatives targeting retail investors, school children, undergraduates, and the general public throughout the country.
So Sheena, social media have become front and center when it comes to getting information. So what can you say about the reliability of social media content?
Yes, Ravisha. We find that retail investors use social media heavily, especially young, tech-savvy generations, to make investment decisions. Something that must be kept in mind is that social media networks can provide helpful information on investments, but they are also home to a lot of misrepresentations. People make up credentials, create entirely fake profiles, and sometimes impersonate legitimate sources. And not all experts who give tips have the required expertise to be able to give investment advice. And Ravisha, in fact, we have come across instances where investment recommendations have been posted on social media to buy securities without any proper basis, and in some instances by school children who claim to be investment experts. There have also been occasions where social media groups have used the name of the Colombo Stock Exchange and logo to mislead investors. So you must remember that investment tips found on social media may not be reliable, and the motive for posting such information may also be dishonest. And it is extremely difficult in these instances to track down who is behind these social media accounts, and anonymity makes it harder to hold such people accountable. So investors who blindly act on such posts run the risk of losing money they have invested. So the point that I want to leave with you today is, if you wish to invest your money based on the advice you find on social networks, be extremely vigilant and validate and verify such information before making your decision.
Yeah, Sheena, I do agree with you on that. There are a lot of misinformation and false information shared by individuals online. When it comes to retail investors, we have realized that they take information from social media when making their investment decisions. So what are your views on the impact of social media on retail investor trading decisions?
Ravisha, in recent years, more people have turned to social media as a source of news and information. This goes for financial information as well. Do you know that there are over 8 million social media users in Sri Lanka at present? And during the last few years, social media has become integrated even into the retail investing landscape. You would have noticed that social media platforms are full of financial advice, investment tips, trading strategies, and even financial opinions. And of course, it is a cheap way to reach a wide audience, because with a few taps on the keyboard, you can share any message you want with the whole wide world. I would say that since financial information can be disseminated widely on social media, it has led to an increase in retail participation in the securities market, and also helped to reduce information asymmetry. And social media usage has also created many self-directed investors who make investment decisions on their own without the help of financial advisors. And of course, social media has led to herd behavior, where investors have a tendency to follow and copy what other investors are doing. And Ravish, on the flip side, while social media can provide many benefits, Risks are also many because of the diverse quality of users and the propensity among some of them to manipulate these platforms their own personal gain. So, regardless of the channel where the information is sourced from, investors should make it a point to fetch information from a source that is authentic and balanced.
Does the SEC regulate social media?
Ravisha, the mission of the SEC, as you may know, is to promote, develop, and maintain a capital market that is fair, efficient, orderly, as well as transparent. With the rise of social media's influence on investment decisions, the SEC has had to adapt its regulatory oversight to include social media platforms as well. This is a phenomena that has been happening in the other parts of the world as well. So, we adopt a proactive approach that aims to protect investors from misinformation and market malpractice. The SEC monitors social media to ensure that social media platforms carry accurate and fair market-related information. This is not a one-day affair, but an ongoing process in the work that we do. So, social media content creators as well as users must be aware that the SEC Act prohibits making or publishing any statement or making forecasts that is known to be misleading, false, or deceptive. Ravisha, the SEC Act also prohibits sharing non-public material information that could influence investment decisions as well as engage in manipulative practices to artificially inflate or deflate securities prices. So remember that only individuals who are registered with the SEC are authorized to provide investment advice.
Do other securities regulators have similar regulations?
Oh yes, they do. In some jurisdictions, it has been made mandatory for financial advisors or influencers as they are known to register with the securities regulator and disclose their credentials. And in some jurisdictions, stockbroker firms have policies and procedures within their compliance programs that specifically apply to the use of social media by the firm and to their registered investment advisors. Ravisha, we all want to play by the rules, isn't it? So therefore, I think it is important for all of us to ensure that we are not negatively impacting anyone else's financial well-being by making misleading statements or giving investment advice online without being a registered investment advisor.
A massive thank you to you, Sheena, for sharing your expertise. Your insights have added a significant pulse to our discussion. And to you, our dear listeners, thank you for tuning into this episode of Market Pulse. We hope you've gained valuable insights that will resonate in your investment endeavors. Remember, the market is a beat that never stops. Keep pulsating with knowledge and making informed decisions. Until our next episode, stay informed and stay ahead in the market.